Hello everyone, welcome back to my channel. So in this video we are going to wrap up the week number 5 of this road to 200,000 challenge. And yeah, this was a moment in which I was really looking forward, because I had a lot of the options that expired yesterday, Friday. And so, as you can see right now, my holdings are clean. They have no more options left, and so only stocks. And so this was a week in which a lot, of course, there was a lot going on. And so I'm just going to give you a brief explanation of what happened. So after I put the trades on Monday, I had made another deposit of around 4K. Because this is sort of a effort that I really want to do to get rid of some of the stocks that I currently have, with HIMS being the highest priority because of its huge volatility. And so it was an odd circumstance, because I used that additional buying power that I had to sell additional puts on HIMS. And so after HIMS having fell around 4% on Monday, I used these, as I mentioned, I used these additional funds to sell more puts on HIMS. And so I ended up selling puts with a strike of 14.5. all right, and so here they are. As you can see right here, I sold 3 of them here with a strike price of 14.5. And oddly enough, the stock on on Tuesday, after I sold the puts, the stock fell another 7.5%, because a medicine company, which of course is not a direct competitor of HIMS, will sell a weight loss drug at a lower. It has announced that we'll sell a lower weight loss drug at a lower price. And even though weight loss drugs currently are a small portion of HIMS revenues, which means that it's not a major portion of its sales through its sales channels, investors are placing such a high importance on this type of product because of its high growth potential. And so even though HIMS is not a platform for the acquisition, it is a platform for the acquisition of health products, it may benefit from the lower price, because there will be an increased demand for the product. And so I believe that this crash in terms of the stock price, it's a bit overstretched, but of course the investors usually have a reason to do it. And so I could not discern the reason, but even so, as a result of that 7.5% loss on Tuesday, the puts that I sold on Monday, which had a strike price of 15.5, they ended up in the money. And so even though, of course, because the puts that I sold on Monday had a strike of 15.5, as you can see right here, these 10 puts, but at the time, unfortunately, these puts that I sold on HIMS with a strike of 14.5 were still out of the money. And so if that stayed in that situation, they would expire worthless. Even though the markets on Wednesday, Thursday and Friday were relatively stable, and even rose. The market rose overall on Thursday and Friday. At some point on Thursday, these puts on HIMS became in the money. These puts on with a strike of 14.5. It went around, the stock price went briefly at around 14.4, $14.40, and so these puts were briefly in the money, but then the stock recovered, and then these puts ended up expiring worthless, as you can see right here. So it was quite of a roller coaster week for HIMS, and so that makes it all the more important for me to really get rid of the stock. But for now, the 10 puts that I sold with a strike of 15.5 were assigned, and so this ended up having the result of lowering my average price. This average price is not really accurate, of course, because I use only the price for the price of acquisition for the average price, and so the average price currently is 17.71, and so this will allow me to sell calls on HIMS to try to get rid of the stock at a strike price of 17.5, 18, something like that, because I think in that sense would be worthwhile, even probably a 17.5 strike to sell the shares, because with the premiums that are already collected, I would still be in the profit, and so that is not really a concern whether it's one strike or the other, even though of course selling them at 18 it's always better than selling them at 17.5. But for the time being, oh, and by the way, I forgot to mention, as you can see right here, the 4 shares close the week at 11.18, so the calls that I sold initially with a strike of 11 would have been exercised, and so I would have, in that case, if I would have kept that trade, that position in the calls, I would have had a loss of around 800 euros or dollars rather, and so because I bought back the calls and so I offset that trade, the exposure was no longer there, I ended up having only a loss, as I mentioned before, of around $142 because of this let's just say conservative move that I did. And so of course this is still a loss that I would rather not have, but it's still much better than a $800 loss that would have happened if I would have not bought back these calls. But it's time now for updating our scoreboard, because we have a lot of ground to cover. As you can see, all of these trades will be closed right now, and there are a few trades to be added also. So yeah, let's get right into it. And so let's just see. Oh, and one more thing before we go to the trades. The American Airlines stock rose yesterday briefly to $10.85, and remember that I had sold calls with a strike of 11, and for a moment I became concerned that those calls will be exercised because of the stock price in case of the stock price exceeded $11. But fortunately, yeah, I decided to stay on track, to keep the position on the calls, and because also when that $10.85 was reached, the stock had risen up until that point about 4.5% and or close to 5%, and so I decided, all right, for a stock with relatively low volatility, a 4.5 or a 5% increase in one day is already quite a stretch, and so I decided, yeah, for all likelihood it will not go that much higher, if it goes any higher, and so it will not reach the $11 mark. And fortunately enough, it didn't. It even went back a little bit and closed at 10.61. So the calls on American Airlines expire worthless, and of course I get to keep the shares and see if I can still continue to chipping away, get more premiums out of these shares to eventually, yeah, basically try to break even at least on selling them. But yeah, I think this is it. Let's see what is going to happen now with the update on our scoreboard. Let's just start by putting in adding the trades that I did during the week. And so the first one, as I mentioned, was this one. I sold 3 additional puts on HIMS with a strike price of 14.5, and so let's just add this to our scoreboard. These were also cash covered puts with a strike of 14.5, and those were 3 puts. Alright, so this is the date in which I sold them. This is the expiration date. We can already put in here that this is the same. This is the closing date because they expire worthless. I sold these puts at 17 cents each, and here, as you can see, the combined fees were 2.1 or 2.10. So let's just add this here. And as I mentioned, these puts right here expired worthless. So the value of them are 0, right, currently, and they simply expired, which gives us, yeah, of course, a nice buffer in terms of returns, and it's always a good thing. All right, moving on from here and continue to the other trade, because I did a further deposit as well later in the week. In this instance on Thursday, on Thursday, but I ended up only making the trade on yesterday, and so I decided to sell as well 3 puts on Lyft. The puts on HIMS were no longer available because for some reason, and so it was not worthwhile to sell out of the money puts with only 1 cent of premium. So I decided to sell these puts. I became a little bit concerned, I should say, because the stock price was hovering around 1160, 1170, and so I was a little bit concerned that they would be activated, even though of course it would also always be positive, but because that would allow me to lower the current average price. But nonetheless, this ended up not occurring, and so I get to keep this amount of shares, and I still keep the funds as a collateral. But to get back to the trade, and so let's register. As you can see, then right here it also expired worthless, as you can see. So this is it, and so those are the 2 cents, and the fees were 105, 110, 115. All right, so let's put this right here. Also 02. These were 3 puts, strike price 11.5. This is the cash covered put on Lyft, and going a bit to the side, this is on 30th, and so these expire on the same day, and they expired effectively worthless. All right, so this is always good. It was also a good return, as you can see, even though of course on absolute terms the value was pretty minimal, but of course this was only a trade that was done and expired in the same day, so yeah, we cannot get that much higher than that. And so these were the trades, and now let's close all of them. All right, and then we'll see that this call on HIMS with a strike of 25, which of course today is quite outrageous because the current price is below 15, but of course it expired completely worthless. And so yeah, let's close out this trade. And by the way, I also must mention as well that during the week, and even from Wednesday onwards, I had a lot of options already priced at 1 cent. So Uh, Theoretically, I could have bought them back. As you can see, this, by the way, this return was pretty low, and so it was really yeah. This is something that relates to the stock price being so low relatively to the strike, and so the premium was low. And as you can imagine, because it was an 18-day trade, yeah, it became with a very low return. But as I was saying, from Wednesday onwards, a lot of the trades or a lot of the options were priced at 1 cent. However, I decided not to buy them back and roll over the trades simply because there were no alternatives. If I would roll over the trades, the premiums would be even lower, 1 cent, 2 cents, and I would have needed to extend the maturity of the options by 2-3 weeks, and so to commit for 2-3 weeks for the calls and having and also but especially the calls, and then having to stay locked in with those calls for 1 or 2 cents of premium, I decided it's not worth it. Let's wait and see what happens next week. And so that is why I kept all of these options until maturity. And so this put on American Airlines also expired worthless. All right, so here they are, as you can see right here. They expired also worthless. This give us a return over annualized of around 40%, which of course it's good. It's a good return. Keeping on from here, or moving on from here, we have this put on for that was bought last week with a strike of 10.5. So this one also expired worthless, and here it is, right, expired worthless. This return was, of course, much more minimal because of course the maturity of the trade, and also the premium was also quite low. This call, which was the one I was really concerned about, ended up, fortunately enough, expiring worthless. And so as you can see, this is the one back here at the top, so it's 2 weeks prior. But fortunately, yeah, the trade ended up well for us. We did not took any losses, and so we managed to, even, of course, the premium and the maturity of the option resulted in a very low annualized return. But yeah, this is the way things are at the moment. All right, so, and carrying on from here, these were assigned. All right, so let's just put in here, let's mark this yellow to make sure that we know, all right, that this trade or these puts were assigned, as you can see here. And of course, now I think is the first time that I'm showing you the fact that actually I think I've showed them before with the Pfizer shares, but as you can see now, what I'm going to do basically is valuing this mark to market by putting here the difference between the strike and the value of the shares currently today, which I believe it's 14.69. Yeah, and here it is 14.69. But however, we must keep in mind that this value is not important, all right, because not Monday, because Monday the market will be closed, but on Tuesday, when the value changes, of course the loss will be variable. So, and what really is going to matter is that at which price I'm going to sell the shares. All right, and so as you can see here, 15.5 minus 14.69, this is a loss of 81 cents per share. So what I'm going to do basically is just putting here 81, even though of course this is going to be going to be resulting in a huge loss. All right, but this is something that really doesn't concern me because this value is just a hypothetical value. All right, and so what I'm going to then do here is to put here another entry in the wheel column, because at some point I will be selling these shares, and I want to know once I do the entire trade for the wheel. All right, because now I sold puts, now I'm going to use this stock to sell some calls on it, of course if they are available. But then what is the outcome after selling the stock back? What is the outcome? All right, because in principle I will sell at this price or higher, so I will in principle have even a break even, and so the break even in price of the shares, so the profit will be only the premiums, or I may have a capital gain plus the premiums. And so for me this is not really a concern. I'm going to copy this to I'm going to basically what I'm going to do is just call I'm going to copy this formula to here. All right, wait, any of these formulas can do, but I believe the best one is probably one of these, which is still not, which is in the case of a wheel, it's not yet closed. And so as you can see right here, all right, this is the formula. All right, and so let me see. All right, let's just delete this because these are not relevant at the moment. All right, 197. All right, this is here. All right, yeah, so this is it. This is, I believe this is correct. Yes, this is correct. So in theory, to break even on the trade of these shares, I would have to sell these shares back at 15.3465, which of course we are going to round out to 2 decimal places, so it would be 13.35. But of course I will sell these hopefully in together with the other HIMS shares that I have, which are right here, and so this value over here will not make much of a difference. We will see what happens, of course, when I sell the entire lot of shares. I'm just going to add here in the notes that here I bought 1,000 shares. All right, so yeah, this is it. Let's just save and continue on. And so the next one is the 3 lift puts, which of course expired, but this trade I have already closed here, as you can see. All right, so let's move on. Then these HIM puts that were added also expired worthless, but as you can see right here, I already closed the trade here, so let's continue. And so this lift put, or these 7 puts on lift with a strike of 11, also expired worthless. All right, so this is something that always is good, even though at $11 I would not have minded at all to buy them, because yeah, it would have brought significantly down the average value. And as you can see, of course, also the return here was also pretty good, 38%. And then the last ones left is Estée Lauder, which expired worthless, all right, at 98, and the Pfizer at 29.5. As you can see, I tried to get a capital gain on Pfizer, and if I had sold the call with a strike of 29, which was the price of acquisition, I would have sold these shares. At this point, I would not have minded to sell them because I would be needing some additional buying power to buy sell more puts on HIMS to see if I can lower the average price even more. But probably that is something that I'm going to consider this week, this following week. Sell them, the calls at a strike of 29, try to break even on the price, get some additional premium, and in the end sell the shares and releasing more money to put some pressure more on HIMS to lower the average price. But for the time being, this was a trade that we did, and so yeah, basically this is it. All right, and so this trade also expired. This premium was relatively lower, but still, yeah, it was a reasonable return of 26.59%. And as I mentioned also before, the estilo de calls also expired worthless. Now, given that the current price hovers around 91, all right, this is, by the way, relatively low return on estilo de stock, but this was also mainly because of the low premium. But now a cause of concern is that my average price on estilo de stock is 98. The stock is currently trading at 91.66, and so I already had a look, and I saw that for next week there are, and at this time, of course, the market is closed, there are no calls available to sell at a strike price of 98, and so probably what I'm gonna have to do is to probably sell a call for 2 weeks and see what happens. Even though of course this is not optimal, it's probably the only choice I have to get some premium out of this. It's not optimal, but we tried to wait and see if the stock price would rise to make the calls more valuable. It ended up not happening to the degree we wanted, because of course the stock price remained at 91.66. So, but yeah, we will find a solution for this. And for the time being, I believe, yeah, we closed all of the trades. All right. And so, yeah, basically this is it. We still have, of course, some ground to cover in terms of the getting into the end of the challenge. This value, 6,400 euros of dollars, ended up going down because of this hypothetical loss. But of course, when we sell the shares, this value will increase significantly because these losses will be no longer here. But yeah, this is something that we will see in the following couple of weeks and see what happens. But for the time being, this is all. And the markets will be closed next Monday in the United States because of Labor's Day. But on Tuesday, I will make another video and show you the trades that I did for week number 6 of this Road to 200k challenge. So for now, wish you all a great weekend. Don't forget to like the video and also subscribe to the channel. Leave your comments below in case you have any questions about the path we are going through with this, and feel free also to subscribe as well. I'm also available on LinkedIn if you have any questions that you want to put out personally. So yeah, this is it, and I'll see you all in the next one.